If you want to make money in trading industry, then technical analysis is something that you cannot do without. And if you do not understand how technical analysis works, or you don't know how to use it or apply it, the truth is that you are on a very huge risk, because it will make you to either continuously lose money or you will keep struggling as a trader. Join me in this video as I show you all you need to know about technical analysis. I am going to pour out the knowledge I have gained so far on technical analysis in a chart so you can be able to pick the value and apply it in your own trading style. And I will be grateful if you can smash the subscribe button, hit the notification bell, and give this video a thumbs up so you get notified anytime I publish a valuable content like this. Hello people, welcome back to Finspoke channel, where we decode trading, money and mindset for everyday people. And if you want to win financially, you are in the right place. Watch this video till the end as I show you all you need to know about technical analysis. Let's get into it. Technical analysis is the study of the historic price movement in order to make accurate decisions of what the market may do next. Every part of the technical analysis is centered around price. Now, these are the things I'm going to discuss in this video. Candlestick charts, trending markets, support and resistance, and chart patterns. I'm going to discuss all of these things in this video. And all of these things that I mentioned, they are all centered around price. Now, the candlestick on the chart is just a visual representation of price itself. Whether it is the trend, support and resistance, all of these things that I mentioned, all of them are centered around price. So what you are seeing is just a visual representation of the price in form of candle. All right, we are talking about candlestick charts. And this thing that you are seeing, the picture you are seeing on the screen now, is the candlestick charts. This is for forex, euro, USD. This is euro, USD. This is candlestick charts. You can bold it. This is candlestick chart. Same, this is same candlestick chart. This is BTC USD. Same candlestick charts. All these things that you are seeing are candlesticks. And this is volatility for those people that trade VIX. This is same chart, same volatility index. This is volatility index. This is a crash. This is, I'm trying to show you that chart is chart. Once you gain the knowledge, you can trade any of these markets. This is boom 1000, and all of these boom and crash, jump, this is another. The chart is the same. So I want you to pay attention and understand how these things work. If you are able to grab the knowledge, you are good to go. I bet you. All right, let's proceed. I'm going to, for this illustration, I'm going to use Euro USD. Like I said, why I normally choose this pair is because you will always see setup here, one. Secondly, is beginners friendly. Even pro traders, they still trade this particular pair. So if you can understand how this pair works, there's no week that you will not see a good setup if you know what you are doing to, trade and make your cash and live your normal life. That being said, let's get into it. Now, what I want you to understand in this is that candlestick is the starting point of the price. You need to understand what the candle represents, what each of these candles represent. I am not going to draw. I want you to be seeing everything in the chart. That's why I moved over to the chart so we can be seeing it. Now, if you do not understand what each of these candles represent or what each of these candles means, you will be making mistakes. Look at my mouse now as I'm pointing at this green candle. Now, this is the body of the candle. From here down to this place is the body of the candle. And this candle opens here. The candle opens here. This is where the candle open, or where the price opens here, sorry. So the price opened here, pushed down to this level where I marked low, and went back, moved up, reached to this point where I marked high, moved down a bit, and they closed here. This is where the candle closed. So from here to here is actually the body of the candle. And these tiny lines you are seeing, we call it wicks. Look at where it is visible. Wicks of the candle. Now I want you to know that, I want to let you know that wicks carries information. It carries untold informations, and is actually where the buyers and the sellers, they battle a lot there. So they pressure. Now, this candle that opens here, this candle that opens here and closed at the upper side is a buy candle. So whenever you see the buy candle, forget the color. I choose my buy to be green and my sell to be red. So you can change the color of your candle. So, but I want you to understand how to identify a buy candlestick and a sell candlestick. The candlestick that opens below and the closes up is a buy candle. Then the one that opens, this one opens from the upper side, from here, and the close here, that's a sell candle. I hope you understand it now. What I want you to understand here is that each of these candlesticks represent the time frame that you are working at. For instance, this is 30 minutes time frame. What it means is that this candlestick, each of these candlesticks that you are seeing is 30 minutes. That's all the activities that transpired in the market, what the price did for a period of 30 minutes is what formed this particular candle and each of every candle that you are seeing here. So what this implies is that within 30 minutes of this particular candle I'm pointing at now, the candle opened here, moved down to the lower side, pushed up again, get to this. This is the highest that the price gets to as within that period of 30 minutes, and came back here to close. Now, this thing that happens in this 30 minutes is also applicable in 1 minute. This is activities in 1 minute. Now, if you go to 5 minutes, it's the same activities. So each candle represents something. So here, each of these candle represents 5 minutes. What it means is that, let's assume that this candle opens here by, let's say, 12 o'clock. It pushed up, came back, moved down and closed here. All these things happens within 5 minutes. So by 12:05, the candle closed here. Within 5 minutes, that is from 12 o'clock to 12:05, this particular candle did everything that it wants to do, and they close, including this pin that you are seeing, and they close. That's what it means. The same thing is applicable. This is 15 minutes time frame, and if you go to 30 minutes time frame, 1 hour time frame, even if it is 4-hour time frame, each of the candle represents the time that you are looking at. And if you go to daily time frame, one of the candle here, this is 1 day, what happens in the market within 24 hours. That is what you are seeing at this particular candle that I'm pointing at. So there is something people do not understand. Most people, not all, most people, especially beginners. This is, if you don't understand these stages of candles, that is where impatience sets in. When you understand that you are dealing with 1 hour time frame, you should be able to understand that it is the formation of this candle, that activities that is happening at the lower time frame where there is a lot of noise, that it is 60 of the candles from the 1 minute that will give you that one candle that you are seeing at the 1 hour time frame. What am I saying in essence? There are activities that is happening in the lower time frame other than the one that you are trading at that particular point. Now that I'm at 30 minutes time frame, there are a lot of things that are happening. 1 second, 1 minute, 5 minutes, 10 minutes, 15 minutes time frame. And it's all those activities that put themselves together or converged or join themselves together to form each of these candles that you are seeing at the 30 minutes time frame. I hope that it's clear now. So understand that whatever that is happening in the lower time frame is also what is happening in the higher time frame. The only difference is that there are a lot of noise in the lower time frame, but each candlestick represents the particular time frame that you are dealing with. So in this case, the green candle represents the buy and the red candle represents the sell. So let's proceed. Now, when you put all of these candles together, that is what forms the trend that we are looking at, or we are going to look at. When you keep putting all of this together, I don't want to draw anything. So I want whatever I'm showing you, I want to be showing you in the chart. So it is when we put all of these candles together that we be able to identify what we call trend in the market. And that's what we're about to do now. Let's get into the trending market. Now, what is trend? Trend, in its simplicity, means direction. That's all I can say concerning trend means direction. So what we want to identify in the market when we open our chart is to know if the direction of the market is up or the direction is down. If the direction is up, then the question that comes to mind is, what are we looking for? And the simple answer is that when the direction is up, we look for more buy opportunities. And when the direction is down, which is downtrend, we look for more sell opportunities. Once you get these basics or these little indices correct, you are good to go in your technical analysis. That being said, let me use just this place and show you what I mean by structure. The market pushed up here to form what we call higher high and retraced to form what we call higher low, where it came to form higher low, and pushed up again to form another higher high, and pushed up to form higher low, and now pushed up to form higher high. When you come face to face with the charts in the market, you discover that the market will not give you something that is as good as this line that I draw here. You will always be faced with something like this. Mind you that this is higher time frame. So when you get down to the lower time frame, you still see this. So when you get down to the lowest time frame, you still see market structure inside this particular structure that I drew here. But the point I'm trying to make is this. When you are faced with a complex chart like this, where it seems a little bit difficult for you to identify the trend because of what I may call inconsistency in price movement. Don't know if the price is an impulsive move, or the price is ranging, or the price is consolidating. For instance, I already put a trend line to show that it's an uptrend, no doubt. But then the market is also creating, in what looks like consolidation, is still creating higher high and what higher low. And that is where your knowledge of market structure, your good knowledge of market structure comes to play in here. What I'm trying to say, or what you should be looking out for, is that they pull back validates the previous higher high. This pullback here validates the former higher high. It is when this pullback violates this higher high by breaking it to the downward, that is when you start thinking of the trend, change of trend. So like this is from here to here before it pushed up is a bit ranging. But so long as the previous high have not been broken, the market is still in the uptrend. Okay, now if the market break the previous high, it has to close. Please take note of this. Take note of this. If the market break the previous high, it has to close below the previous high. If the market, assuming that this pullback break or violate this previous high, it has to close below this point that it violated. It's not like it broke this point and it closed above this. These are two different scenarios. So if it violates this point, or it breaks this point and close below, you should be looking at the market changing direction or the trend changing. I hope that lesson is learned. Just like that. To an extent, I choose this particular place because it is not that smooth and palatable. And when you use a simpler chart to show beginners structure like this, when they get to something like this, they become confused. Now, if you look at this, you will see that the market did a higher high, range, and came down, pushed down to validate this high, now pushed up again, and it came down to validate this high and moved up. So now coming down here, the market did not break the previous high. So now this movement is what we call trend. This one now is trending up. In other words, it's an uptrend market. And this thing is what we call market structure. I will still do a separate video on market structure if I have a good number of people that want me to do video on market structure. So I will do that. Now, when you understand how this and the rules guiding it, it will help you. So automatically, this is an uptrend market. What are you as a buyer looking for here? You will definitely be looking for a buy opportunity. This is the trend that now it is from this trend or this direction or this movement that the word trend line came into being. So it's from trend that you get the trend line. The trend line is just something that is helping you to identify direction. It's helping you to identify direction. Now, when you want to put your trend line, make sure that at least 2 points are connected. Look at this. I connected this and this to get a direction. At least 2 points are connected. The market pushed from here, it pushed down, go up, push down again, go up, push down again, just like that. This is downward movement. This is downward movement that the market is making. So without putting this part that I just used to illustrate something for you, you can easily put this line called the trend line. Let me put it again. Let me draw the trend line again so that you see it. If you are putting your trend line, make sure it is touching the tip of the wicks. Reason is because if you don't make it to be at the tip of the wicks, then you are not fathoming in some activities that happened within that place. These wicks that you are seeing here, the activities happened in a lower time frame. So if your trend line, sorry, I digressed a little bit. I will still do video on trend line. If your trend line cut across the wicks, automatically it will not give you clarity of the activities or whatever that happened at the lower time frame. That's why you have to put it at the tips of the wicks. Now, that being said, we have been able to see how this movement happened. It pushed down here and came up. This is the downward movement and a pullback. In order to make this downward movement again, there was a pullback. It pushed again and there was a pullback. Normally, this is how the market moves. So when it goes up, it will come down. When it comes down, it will go up. This is just the way it moves. It doesn't move straight. So understand these little things. It will help you build your psychology when you want to enter a trade. So for this downward movement now, what we are looking for is more of selling opportunities. We are looking for more of sell opportunities. That doesn't go to say that you will not see buy opportunities. No, you will, but you will see more good sell opportunities in a downward trend. Now, if you look at the two charts I showed, this one currently is GBP USD. You discover that the movement of the market is not that straight or consistent. So when you face with a complex chart like this, because you definitely come across this, in fact, often this is what you see in the market. I want you to understand that an impulsive move that gives rise to that higher high will be followed by a pullback to create a higher low. So in this case, what we have here is lower high. And this pullback, what it will create is what we call lower low, just like that. Please, if you are gaining value in this video, kindly smash the subscribe button, hit the notification bell, drop your comment in the comment section, and share this video. Let's continue. Now that we have been able to identify the trending market, understand the uptrend and the downtrend, the next thing we want to look at is the support and the resistance zone. Now, you need to understand the support zone and the resistance zone in any market that you can. When you open your chart, that will help you to know what to expect when price reach a certain place in the market. Now, the support and the resistance zones are areas in the market where the price is likely to react from. Now, the support area is where the market gets to and it will bounce back. And the resistance area is where the price gets to. The price is likely to drop from that particular area. That's what we are talking about. And also, along the line, there's a time that the support area becomes the resistance area. And there are also times that the resistance area also becomes the support area. I will show you all of this in this chart now. Follow me as I show you the support and the resistance and what we call flip zones. Now, if you look at this, let me put a line. Looking at this now, this is a support zone. It is a support because the market reach here and it will push up. That is why we say it's a support zone. This is for learning purposes. You might be asking, why didn't I put it at the tip? Well, the simple reason is it is called zone. So you need to accommodate or fathom as many as the major points or places where the price reacts. That's why I didn't put it at the zone, because if I'm to at the tip, if I'm to put it at the tip, I will put it here. If I put it here, it will just rest here, and it will not accommodate this one, it will not accommodate this one, and it will not also accommodate this one. Now, we have mid zones, but mind you, I am not teaching about zones. We also have mid zones. That's what you should understand. And also understand that I am doing this using the 4-hour time frame. Now, this zone, this support area, now you will also see it at the lower time frame. It is not only at the higher time frame that you see support zone or support area and the resistance area. So this is the support area. And if you want to use this support area to enter market, you should be targeting this place. You should be targeting to get a trade around this place and put your stop loss below. But that is by the way. Now, for the resistance zone, you also look out for the area or the zone where price gets to and is likely to fall back. And in this case, we have the resistance zone. Have something like this. The price reach here, it will bounce back, or it will begin to go down. So price gets here and pushed down. So look at this. This is where the price gets supported or gets support, meaning that it gets here, it bounced, pushed up again, it moved down, gets here, it pushed up, it moved down, gets here, it pushed up, things like that. So it is trying to find a balance here. It will keep hitting this until, assuming it is a downtrend, until it will break it. Now, look at what I'm trying to explain here. This is the resistance zone. When it gets to this point, it will push back. Range, move down, pushed up, range, pushed up again, hit the line, pushed down, hit the line again, pushed down, hit the line again, pushed down, before it was able to break the line. Now, understand this, that as the price is touching that zone, bouncing back or being rejected, if it touches the first one, touches the second one, touches the third one, just like that, at some point it will break that place and move on. That was the scenario here. It's just like when you are hitting a hammer in a wall. You come, you hit, you come, you hit, you come, you hit. You keep hitting it until you're able to break that wall. That's liking it to what is happening either at the resistance level or at the support level. Now, here, the price was able to push back and break this zone or this support level and pushed up. Is looking for a support area again. So when it breaks a particular level, it will move either up or down in order to find a resting place or a supporting area. Now, if you come across this thing, people trade support and resistance, or smart traders trade demand and supply. And these are the key zones. This is where you see it, or you'll be looking out for something serious if you want to use this strategy. I'm not teaching this strategy. That's not what I'm teaching. I'm trying to show you how to get your support zone and your resistance zone. But if you want to take a trade from here, you should be targeting getting a trade. If it meets your confluences, then you should be targeting here and moving down as your take profit, while your stop loss should be above this level. Now, that being said, this video is already long. Try and rewatch it. You will pick one or two lessons that will help your career. Okay, let me say this. All things being equal, if you get a trade around the supply zone, around the support zone, if you get a trade that matches or meets your confluences around here, is mostly a sniper entry. And if you get it at the support, at the resistance level, is also mostly sniper entry too. But then you don't just put a line and start waiting for the trade. You need to confirm before you enter the trade. I want us to look at the chart pattern. I will only show or illustrate using one. We have a lot of chart patterns. We have the double top, which is the common one: double top, triple top, double bottom, triple bottom. We have the cup and handle. We have the head and shoulder. We have a lot of them. A lot of them. So you make out time, sit down, study the chart patterns to know the one that you are going to use that will suit your trading style. Just looking at this place I'm pointing my mouse, you will see a double top. Now, what I want you to understand is that sometimes when you look at where it is being drawn in a chart, you don't expect it to be very smooth the way, or to be 100% smooth or aligned the way it is being drawn when it is just a normal drawing that is being shown to you, like something like this. You can draw something like this and draw something like this and draw something like this again and draw another one. Now, this is double top. So you don't expect that it must, the tips must be the same. In reality, which is what we are seeing here, is not in all cases. It's not in all cases that it will be like this. Like if you look at this, the first rejection or the first resistance is a little bit higher than the second area where the price bounced back, or the price was rejected, or where it gets to and start pushing down. So don't always look for a smooth structure. That's what I'm trying to say. Now, this is the top, and this one is the second top. That is why it is called double top. This is the neckline. This is the neckline. So let's look at it properly in a chart. Now here, the market came here and creates a level of resistance at this point. Then bounced back, came up again and create another level of resistance before it continued moving down. Now, when it creates this level of resistance, it moved down here to create a neckline here. To create a neckline. To create a neckline here. Before it pushed up again. Before it started coming down. Now, in some cases, not in all cases, it will come to create this neckline and break the neckline, retest it before moving down. In some cases. And in some other cases, it will just act the way it acted here. Let me go down to the lower time frame and see if we get an exact illustration of what I'm looking for. So synthetic is not like forex that you, when you analyze it, will just save automatically. So this one, if you analyze it, you need to save it. You need to save it, and when you need the chart, you have to go to where you save it and they bring it out. I actually analyzed this trade. When I analyzed the trade, I forgot about it and it played out. These are trades I took. So forget about this noise. Forget about this noise. I want to show you something here. Forget about the noise in the chart. When I put this trend line, this trade, the price have not even reached here. I think it was around here. So forget all this noise and focus on what I want to show you. Now, about a double top. This is what the trade did. It came here. It came to this resistance zone and pushed back. Instead of continuing, it pushed back, came up again, even though it broke the zone. Like I told you earlier, sometimes it will not be as smooth as the way we draw it when we want to place a drawing. I spotted this trade early enough. I think I spotted it at the neckline. That was when I analyzed it to know that this thing is actually forming a double top here. But let's see how it goes. So I put the line. Since it has bounced back, created this neckline here, it will definitely go up. If it breaks this zone and they continue, then I will know that it is a continuation. But if it doesn't, it will definitely come down and retest and break this neckline. Once it breaks this neckline, it will retest. I was actually waiting to get the trade around this place. This is the break of the neckline. It broke the neckline here with this indecision candle and retest it before it started pushing down. Get to this next zone and reversed. So don't mind this line. These are zones. I use it to mark zones. Each zone carries informations to me. I don't know about others. So when I want to do a proper analysis, I take my time to look at things. So what I'm trying to say, or the lesson I'm trying to bring out here, is this. When a double top is being formed, what you see as the double top, the same thing is applicable when this thing is like M now, when it is facing up like double bottom. Now, double bottom is a buy signal, while this double top is a sell signal. So you also look out for the break of the neckline. You can see it now, the break of the neckline and the retest before it will push down. So if I was able to get this, I forgot about this trade. I analyzed it and I forgot about it. But it actually played out. Assuming I got this trade here at the break of this neckline, zoom, I would have get something from here to here. Remember, this is 1 hour time frame. So when you move down to a lower time frame, you see that you actually get a good trade. So if I am to enter this trade and I enter the trade here, I will put my stop loss around here and target the next supply zone as my take profit. So what I'm trying to say is that sometimes it will break the neckline and move straight, and some other time it will break the neckline and retest. In the Euro USDT, Euro USD, in that Euro USD, there was no retest of the break line, the neckline. But here, it retested the neckline, pushed down, and it came back around that zone again. But if I'm in the market, I would have get out of the market around here and wait for the next thing. Because remember I said that the support and the resistance zone are the areas where the market reacts. So already I knew that when the market gets here, gets around this zone, it will definitely react. So I have my target around here. Like I said, I'm not teaching about zone, but in between, from here to here, we still have what we call mid zones. So when it gets to here, it also reacts. But then your mind should be centered, or you should be focused at the next support level. If you are selling, or at the next resistance level, if you are buying. Why I like waiting to look for a retest is it helps to validate the pattern and catch more move. It helps to validate the pattern and catch more move. That's one of the reasons why I like to, look out for the break of that. I would like to look out for the break of this neckline and the retest. Again, I also pay attention at the zone. But I already know that in most cases, the levels will not be the same. Even if it is a head and shoulder, sometimes you just encounter something like this. So you look out for, you pay attention in this place. Don't just zoom in and zoom out and say that you have seen a chart pattern that I talked about for that. You just enter into the trade. When you see something like this, you spotted a good opportunity, but you need to follow it diligently in order to get something out of it. I will encourage you, especially if you are a beginner, to study the chart patterns. It will help you. At least the simple ones, the double top, the double bottom, triple top, triple bottom, head and shoulder. These are some of the commonest patterns that you will always see or coming across in the market. Now you need to see the first pattern and the pullback, which is this move and the pullback before it came up again. You can spot and mark it like I did on this, even though I forgot about it. You need to keep an eye when you spot a trade. You need to keep an eye to see if they pull back, if it will close with a wick in the box here. I'm trying to tell you how you can validate this zone. So try and look out for wick candle, indecision candles like this, things like that. You need to know if it is going to close above or below your zone. Get a good confirmation before taking the trade. A very good double top should close within the zone. Then once this is done, look for a break of this neckline. Look for a break of this neckline. We are talking too much. Let me just... Okay, now look at it. Look at the neckline. It came here to break the neckline, range, and there was a sell pressure down. It actually also came to do a little retest before it pushed down like this. I think it's a bit clearer at this 15 minutes time frame. But I hope you get the lesson. So this is where the neckline was broken and it came here to range. You know, market can use any pattern. It came here to range before you now see the sell pressure. If it is a double bottom, you should also look out for a buy pressure. So if I'm entering this market after analysis, I should be looking for things like this before I take the trade. So it came here, break the neckline, range, give us this momentum candle, and now pushed down. One of the things I will tell you is to always allow your trade to run. But you need to pick these little lessons that will help you to know where you are targeting and what you are risking. That's one of the things that will help you. So another thing I want to say is that these patterns align themselves in the higher time frame. If you spot it in the higher time frame, it is in the lower time frame. Always do what we call top-down analysis. Start from the higher time frame. Whatever you see in the higher time frame is happening in the lower time frame. So when you spot it around 4 hours time frame, don't wait to go and take the trade at the 4 hours time frame. Move down to the lower time frame and pick the trade there because of the size of your capital size and all. All right, guys, if you really gain value, please smash the subscribe button, hit the notification bell, like this video, drop a comment, and share this video. I will see you in my next video. Thank you.